Hey, okay. The Euro saga is done. I know you can debate this. I know that there'll be more Euro stuff in the future, but the big wait, really, it's over. And I'm relieved for that. It's been a real drag. Incidentally, I've changed my chart color here. I usually like to use black with just white bars because I don't know. I'm being kind to my monitor, but if you like this better, if it's easier to read, click on an ad to vote to voice your approval because I think this might be easier. So hopefully, anyway, this is the year over the past couple of days, and what shocked me about this is that I was at my daughter's gym around this time when the news broke, probably right there, that they've got a deal, and so the euro went whoosh and kind of eased down back a little bit, and I was just floored that it took like 16 hours or however long it was for the news to be really embraced and understood and appreciated. The euro just kind of spent all night going higher. It's not like they had 20 consecutive announcements, did they? I wasn't up to watch this, but kind of shocking. I thought it would be kind of instant, like boom or something, but it took a while. It took a long while. Nothing to draw from that. It was just kind of puzzling. And in turn, our good buddy, the ES, followed suit. And this month has been really good for the equity bulls. We've gone up, I think, something like 2,000 points on the Dow. We've gone up. It's I almost can't even say it. It's so big. It's over 200 points on the ES. It's just incredible. Even I recognize things being oversold here, but my goodness, I thought all around this area that we were going to fall back down into the range. Didn't happen. Didn't happen. And I think for equity bears may have a real problem here, which is that now that we're out of this range, this line is support, and rather formidable support, I might add. It had been our best friend. Now it's kind of our worst enemy. And it would take, terrorist level news to force us back beneath this line. Quickly, at least. I mean, over the course of months, sure, we could ease our way back down. But what I'm saying for the short term is that, whereas before we could kind of count on this range to kind of play off these bounces, this has been a merciless rise. We may soften a bit tomorrow, but it's not like it's time to start beating the drums as far as the bear market has now begun. Goodness gracious! I will say though, on a more positive note, that we are getting awfully close to what I consider kind of the highest reaches of where I thought things might get to. And I will say that I'm a bearish sort. This month hasn't been good, and this day wasn't good. However, the key for me is to mitigate situations like that. The Russell, what was the Russell up today? The Russell was up. I tend to trade high beta stocks, so I look at this as a guide. The Russell was up way over 5%, and I took about a 1% clip to my portfolio. I don't like losses, but I'll take 1% loss instead of a 5+% loss any day of the week. How did I do it? Well, nothing brilliant to it. I've said all along that I'll be cautious until this euro thing is done. Now it's done, so I'm not going to be so cautious anymore. So I had about half my portfolio in cash, and of the positions I did have, about a quarter of them were on the bullish side. So I had names that I usually can't even say without gagging, like, I was long Goldman Sachs, I was long a number of financial stocks, I was long a solar stock, things like that. So between the cash and the longs, it really helped bind the wounds, as it were. But I'll tell you, when that market opened, you talk about getting stopped out of positions. It was just like, I was stopped out of virtually all my shorts pretty much instantly. So not a day I want to repeat too many times. Now, as far as the NQ goes, it's really as if this never happened. I mean, the NQ is a funny beast because its fall was really short-lived. I mean, if we look back, it fell from starting July 26 and ending on August 8th. I mean, what is that, like 7 trading sessions? Let's call it a week. I mean, that's how long the bear market in the NASDAQ left. Since then, it's been climbing. Got some weakness here, then climbed again. So we're every bit as high. We're back to, it's July again. We're at the upper echelon of oh God, I can't think of the word. We're up there. So it's like it never took place. All right, let's get away from these daily charts for a bit. And let's back this up to come on. Let's do a 10-year daily. And look at some big indexes here. So the Indu up, way over 300 points. As I said before, we have bounced from 10,400 to about 2,000 points higher than that. Getting very lofty here. I mean, we are approaching the kinds of levels above which the market hasn't been able to muster. And I will remind you of the next drama. Does anybody remember the whole debt ceiling crisis thing? And remember the pact they made? And they got to cut like trillions of dollars or else it automatically starts slashing the budget. That's coming next month. That's coming soon. So now that the whole euro thing, I don't want to see Merkel's face again in my life, or Sarkozy's. Now that the euro thing is done, we can turn our attention to Washington next month and obsess over that, because that's going to get it's going to get ugly. And the cool thing is that there is no resolution, because if they don't figure something out, it figures itself out for them. So they will be forced to make some very deep cuts, whether they like to or not. So they kicked the can down the road, but this time it actually has a due date on it. So pretty interesting. In my world of ETFs, the biggest movers today were, not surprisingly, the big up mover was EDC. This is the triple bullish on emerging markets, up 20% at one point. And its doppelganger, EDZ, which, like many bearish ETFs, is really approaching levels never seen before. Some of them at new lifetime lows today. But this one got walloped over 18%, way down there. While I'm thinking of it, I want to point out a very nice, I haven't positioned this very well, a very nice chart that a kind sloper sent me. This one is of the ERY. And he sent it to me because I had mentioned yesterday that historically this thing has been tagged at the precise bottom of equity market tumbles. And I, got kind of noted it'd be worth watching in the future to see if it tags it again as a good reversal point. He went the extra mile, this gentleman. He said, well, what about the lower side? What about tagging the tops? And it actually, 1, 2, 3, 4 instances where it's done that. And how about that today? Tag that same line. Food for thought. Food for thought. Excuse me, you can't quite see that. Let me sneak it over there. Sorry. I'm trying to fit it all in here. But that's what it looks like. I can scale this a bit better. There we go. So now you can see kind of the whole thing. So again, it's ERY. Back to my own chart here. Get rid of this. So a few other things I wanted to show you. I noted, although I don't trade options, the VIX I look at daily just to kind of see what it's up to. Really slammed hard down today. I mean, I guess now that the headline risk has gone away from Europe, the risk in terms of volatility also took a big tumble. Interesting. This is about half the level it was just not too long ago. So big sea change in the market. And another thing is I haven't been really monkeying around with precious metals. I did note that if we got above this level, that there's a lot of open air here for it to free range. Well, it did just that. I think GLD might get as high as this level, 173.14 or so, before easing back down again, because it's just got a wide open field. And silver had an even bigger day, up nearly 5%. Here again, just open air. And once it got above this level, it was just off to the races. So we could see this get up to the high 30s before it settles down. One other, not really commodity, but it's a future of interest, is the long bond. Once we broke beneath this level today, it really just crumbled. I read the auction went quite poorly on treasuries today, and so the next line in the sand is down here at 134 point. That's not very precise, is it? Let's tag that right there. 134.81. Lot of open air beneath that. Obviously, if it does fall down there, we're looking at much stronger equities. So it remains to be seen on that. Let me show you 5 longs and 5 shorts I've got right now, just to wrap things up. We'll start with the longs. And these are longs that I actually kind of like. 1 or 2 I've mentioned before. So one's Activision. It actually went down today, which I guess shouldn't be considered that encouraging on a day like this, but it's just such a good formation. It's such a nice big base and a nice clean breakout. I really like this stock. Very similar as Celgene, CELG. Again, bit of a soft day, but just a beautiful formation. And I'm not real eager to be buying up stocks that, when they pop 10 or 15%. Rather get just good solid formations that haven't necessarily done their whole price discovery yet. GameStop, I've seen Game Obsessed here between this and Activision, but I do like the basing going on here, and that's GME on that one. Hewlett Packard, kind of a boring stock here, but one that got really punished a few months ago. This is a very big company with a very long history and a great brand, and this base down here, I think, could give us a good 4 or 5 point lift, because there's really not much holding Hewlett Packard back. Nice kind of blue chip stock there, relatively speaking. And then this one today had a very strong day. Northern Oil and Gas, NOG. Zooming in on this, I'll feel even better about it if it can get above that 2501 level. It's just about a dime away from it right now. But handsome pattern here, and would like to see it above there. Let's look at those shorts. Good old American Greens, AM. Anything that went down on a day like this on the short side, I do find encouraging. So this is AM. Huge topping pattern on this. I've mentioned it more than once before, but I just really like it. Very similar symbol here, AN, AutoNation. Got a stop on this one just above the lifetime high at 41.56. Nice symmetrical triangle there, and an opportunity for a tumble. CE. This is Celanese, and it had really tipped its hand in terms of weakness. Exploded higher by about 50% right at this gap close here. So a good position with a very clean stop loss. Ford Motor, which has the honor of being the only U.S. automaker that didn't get bailed out, actually got back on its own feet. But that notwithstanding, very pretty topping pattern right here, and a nice clean stop, I'd say, at 12.66. Lot of open air beneath Ford. And the last one, Coinstar, this one actually is down after hours, over 11% right now. I was short this. Something seemed funny about its behavior today, because it kept kind of inching downward, and that I was scratching my head as to why, because any short that did well today I was puzzling over. I didn't even know earnings for this evening, but they were, and it's tumbled hard. I've never really understood why this company does so well. I mean, that has nothing to do with the chart. It's sort of like you dump a jar of coins in and you get a gift card. Okay. But anyway, it's falling after hours, and I think that as far as a channel, this is a very attractive one. Maybe we'll see this one get down to 40 or so again. I need to wrap it up. We're coming up to the 15 mark, but glad I survived the day, and I'm glad the Euro thing is over. And congratulations to bulls out there for making money today. Great job. Bye.